Hello and welcome, everyone. James Bishop here. Want to do a quick audio check. If you guys can hear me, go ahead and type in what city you are watching this thing from. That way we can get things kicked on off. Sharon already knew. Sharon, good to see you. Hope things are going well for you. Deborah, thank you. James, thank you. We got Wisconsin, Jupiter, Florida, Spokane, Washington, San Francisco. I know we have Michigan here as well. Jason, good to see you. Robert, whereabouts in Florida are you? Greenville, South Carolina. John O missed you this year at the Mastermind. We got Jefferson, Jerrison, North Carolina. Sunrise, Florida. Colonial Beach. All right. I like that. Fort Bragg, if you will. Good old Fayetteville, aka Fayetteville, or Fort Bragg, as they say. Great to see you and have you in here, Carrie. Definitely. Joseph, we had our appointment for Saturday, but we missed it. We got to catch up. I'll send you an email tomorrow and we'll catch up for that appointment. Skokie, Illinois, Miami. Tom, good to see you. We got Orange County, California, Birmingham. Good to see you, Dennis. I'm glad. Let's see. We have Hawaii as well. Fantastic. Guys, thank you guys so much for being here this Sunday evening, and taking part of it. You guys are what makes this session worth it. I'm glad to bring you guys one of my favorite people in this entire planet. Somebody I traded with, somebody I learned from, somebody I am very close friends with. And I cherish our relationship that we've had now. I think 14, 15 years. One of my closest friends is going to be in here with us, Josh Martinez, here tonight. So I'll be introducing him, and then we're going to get right into a whole bunch of things, because I don't know if y'all know it or not, but since from last Sunday to this Sunday, one or two things has occurred in the world that affect the markets. I don't know if anybody's been paying attention to the news, but we got like one or two things that have been affecting the market here. So let's get into it. Before we begin, I have to let you know we are not acting in capacity as commodity trading advisors or our licensed financial professionals. Simply here showing you opportunity, understand that opportunity, and make sure you are willing to take on that opportunity before you on that risk before you take any trade. And that trading has risk, and you have to be aware of risks and be willing to accept those risks. Any trades I take here today, if you decide to take those, just know those are of and on your own volition. Now, really quickly, anybody in here, is this your first time in this session? Type in a yes if this is the first time in this session. Let's see. Okay, good. A lot of first-time individuals in the session. I'm glad. Then really quickly, I want to introduce myself. My name is James Bishop. I have been in trading and trading education for 17 plus years. I'm the founder of a managed fund, or co-founder of a managed fund. I also own a retirement estate planning company, which means I am a licensed financial professional. I have my MBA in finance and global portfolio management, and currently working on my doctorate in finance and economics as well. What that really just means is that, one, I love to read a lot, and I'm forced to read a lot. And because of the area I'm getting my doctorate in, it benefits you guys. So as we go through today's session, right, and we're going to take a deep dive into analysis, both on the fundamental level and the technical level. We're going to be discussing how news is going to affect our markets, things we need to be paying attention to, all sorts of things happening in a cornucopia of chaos that is happening right now in this world. But as we take a dive into that, ask questions. All my background means is that you can ask me questions, and I'm going to give you answers. And if I don't know the answer, then I will tell you that I don't know the answer, because I don't need to just spout off like I know something when I don't. That's one thing you'll never get from me. Okay. I may be one of them talking heads out there in this world, but that's just, you're not going to get a false answer or a half baked answer from me. Now, as I said earlier, one of my closest friends, both in trading and in education and in just in life, is Josh Martinez, and we have him here today. We're lucky enough and fortunate to have him here today. So, Josh, I'd love for you to come on and introduce yourself and talk a little bit about yourself as well.
Of course, I'm glad to be here. Can everybody hear my voice? Can you hear me, James?
Yep, I got you.
All right, perfect. Well, it's an honor. If you could just kind of click all those bullet points, I'll be happy to say hello and just kind of introduce myself for those of you who are new. Hey, Neil. Hey, John. Hey, Brandon, Joseph, Dan, William. Appreciate the opportunity. Hey, Claudio. Welcome, welcome. All right. So I started teaching, trading, educating inside of 2009. So over 15 plus years, I'm a market analyst, market educator, and I'm a demonstrator of strategies. I'm also a real trader myself. I spent about 10 years trading the Forex market, foreign exchange, and then I'm going on about 7 calendar years trading the futures market. Year to date, for the futures market, we have passed over 125,000 US dollars in prop from challenges. That's five $25,000 accounts. My longest winning streak with trading was 20 calendar months in a row. I had losing trades along the way. I just won more than I lost for 20 calendar months. I host weekly live trade sessions where I trade in front of people, analyze the markets, and take the shot. People see me win, they see me lose, and of course, we analyze the market and we answer questions. So far, with last year's donations, we're up to over 16,000 US dollars in trading profits to charities. Our recent donation was 6,000 US dollars to my church for the food drive to help fill the food pantry to feed the hungry, and that came specifically profits from trading. And from predictions, one of the things that we do here is we'll analyze the market and we'll say, okay, based upon X, Y, and Z, we believe the market's going to this price. About 92.06% prediction strike rate, and that's over right around 200 predictions, which our third party track through TradingView. Now, don't it looks better than what it is because I like to focus on buying indexes, right? And so indexes tend to go up over time. So it's kind of a cheat sheet, which you guys will see. Now, I'm excited to be here. I'm grateful to be here. I'm humbled to be here. James and team invited me, and I look forward to contributing as much as I can. And I think these Sunday sessions are incredible. So thank you for having me on, James.
Absolutely, Josh. You're our second guest we've ever had on, and I'm just honored that you're here. And I know, the time that to take away from your wife, and the kids as well. So, first thing I want to do, a couple of housekeeping items, guys. First and foremost, the Wealth Watch. And I'm going to give you guys a second newsletter here as well, which is Josh's. I have it in another screen I'll bring up in just a second. But first things first is the Wealth Watch. So if you guys don't know what that is the newsletter that I offer. I'm going to send out that to you all. And this is a daily, once a day, you'll get an email from me with a video, a trade that may have a trade setup. It may be psychology. It may be what's going on in the world. It may be prediction based as well, right? Like what we talked about last Thursday was, hey, I am preparing for a potential huge market correction. Then came Friday and then today, as you guys saw, right? From Thursday to today, if we were to look at like the NQ on let's just look at like a 1 hour time frame really quickly. You guys can see that, hey, we've had a pretty dramatic last few days in the market, with a sell-off starting the day after I sent that video out of about nearly 2%. So that's just the start of what's potentially could come. And so that Wealth Watch, anybody can subscribe to it. It's absolutely free. And then I also want to share with you guys a little bit about Josh's as well. I have it right here, and Josh has his newsletter. Josh, if you want to talk a little bit about the Daybreak Funnels newsletter, I'd love for people to learn a little bit about it.
Yeah, of course. So the daybreak strategy, it's a strategy that we apply on the NASDAQ 100. We do it on the 1 hour time frame. So it starts at 9 a.m. Eastern time and ends at 10 a.m. So it's Monday through Friday. So right at the 10 a.m. close, we place a pending buy order, one tick above the candlestick wick high, and we go after 20 ticks. Now, of course, we have a stop placement, but in the last 227 trade ideas, this has worked 226 times. And so with the day break, what they will receive for those of you who do this, right? It's a daily video, and it's a progress report. So I'll cover the NASDAQ 100 specifically. I'll cover the breakout that occurred from the day before, what the order was, and then I'll show you the latest up-to-date win-loss ratio of the track record.
Love it. Thank you so much. And guys, I sent that link out in the chat. So subscribe. That way you get both of our newsletters to bring you some great information as well. The other thing is our Discord channel. So as you guys can see, it is getting more and more active by the day. We have Freddie posting some trades that he's taking. He took a huge Iron Condor, 3,200 contracts per leg here. Other different indicators and different strategies that he is using, and then questions as well. This is really what I built this as, is a group of traders that can learn from each other, share information, share ideas, and all of that. And the fortunate, unfortunate thing, guys, is time is not on your side if you want to wait to subscribe, because this link expires every 7 days. So you have to keep coming back to join the Discord. So there's the link. If you join it now. You're in there permanently, but that link will expire in 7 days. All right. So I see we got 2 people that just joined it. That's awesome. Congrats. Thank you. 3 people now. Make sure you guys join that Discord as well. This is just a great way to meet other traders, learn from myself and other traders as well, and then ask questions to other people. So appreciate you all for those 5, 6, 7, 8, 9, 10 of you guys that have joined thus far. So let's get into some of the announcements and then some of the news, and then we're going to get into definitely some big trading opportunities. So fundamental news announcements for the week. Go ahead and screenshot this while I'm talking and type in done when you have it screenshotted for me. Okay. Lee, I'll talk about that later on. Some very, very soon. I'll talk about that. But we have manufacturing PMI coming out on Monday. Now, the Purchasing Manager Index is a good check to see an indication of inflation, right? Let me just give you an example. If I own a number 2 pencil factory making the standard yellow number 2 pencils, right? I have wood, I have aluminum, I have rubber, and I have graphite that's in yellow paint, right? And that's probably all I need to build the pencil. Well, if all of those prices of the raw material goes up, then my PMI, my Purchasing Manager Index, is going to go up. That means I'm going to have to raise the cost of the pencil in order to make the same amount of profit, level of the same. Well, that is going to be reflected in this PMI, and then it will trickle down to CPI and other measures of inflation as well. We have JOLTS job openings, ADP non-farm employment. I'll be honest with you, I don't put a lot of stock in ADP as much as I used to, mainly because of other HR companies that run small to medium businesses. It is more prudent for those services to be used by small to medium businesses, and small to medium businesses are the biggest employers, private employers in the market. But it's still a good number to look at, and the market still reacts to it. We also have initial jobless claims. And then on Friday we have the big announcement of non-farm payroll. This will be a very interesting one to see what this jobs report looks like for the month of March. We usually have seasonal working and seasonal stuff ending at this time in February. So that generally we sometimes will see a tick up, and we will see what happens. Now, the next slide is May earnings this week. Now, these are, I generally look for the top 10 by market cap, and then I add in a few notables here and there. This isn't every company reporting earnings this week, but screenshot this. And if any one of you guys want to screenshot this and post this into the Discord, feel free. Okay, feel free. So type in done when you got this screenshotted. Now, we have Monday. We actually have a few ASTS is reporting on Monday. I know we've analyzed that here a lot. We have Target on Tuesday. AVGO or Broadcom on Wednesday. Brown Foreman, if you don't know that, that is the maker of Jack Daniels. I'm actually just, that's a personal one I'm interested in because the distillery for Jim Beam, they actually shut their distillery and furloughed employees because they have such a surplus because people aren't drinking as much, which it'll be interesting to see if we see this, Brown Foreman as well. If that happens as well, we have Okta and Costco coming out as well this week to wrap up the week. So beautiful. Looks like everybody in here has that screenshotted as well. Rob, it could be, or maybe just people are just too stressed. I love what Freedom just wrote in here. He said, just wait for the economy to tank. People will start drinking again. Oh my goodness, that's hilarious. One company I looked at for a while was Moet, mainly because of, if you didn't know, champagne can't be called champagne unless the grapes are grown in Champagne, and in the Champagne region of France, there's been so much drought in the summer and heat in the summer and so much rain in the wet season that grapes just can't grow. And so if they have another year, they will bottle nothing for 4 years in a row. And that is going to drive the price of champagne sky high. So the sky high, that's just a little Jeopardy fact that nobody needs to know, but hey, you know it now anyway. So Dennis, I like that as well. Now, before we jump in the charts, we have to talk a little bit of news and a lot of bit of news. And I'm gonna attempt. I said this at the intro, right? A cornucopia of chaos is where we are sitting. And that's the truth. We have so many different things going on, but I'm going to attempt to wrap this up in a simple, easy, digestible way for you. That way you can understand broadly what is happening in the market. And then I have a couple other things that I'm going to share with you as well. So the first is I'm going to put this under the category of current market forces, right? We have private capital issues. Think of companies like Blue Owl, right? I'm going to bring up Blue Owl as well on a chart here. Blue Owl. Actually, you know what? Let's see. Stifel. No. Okay. So I can't bring up the charts because they are private equity companies and things like that, but they are publicly traded. Blue Owl, Stifel, some of these private equity companies, they went in and they were the ones that were giving loans to these SaaS companies. SaaS was the big thing for a long time, right? Everybody was trying to make software as a service. Everybody was trying to make software as a service. Everybody was trying to get you on a subscription. And AI has kind of ruined that SaaS model, and these companies gave huge, massive loans to these software companies, thinking they're going to be there forever. But these software companies and SaaS companies, they don't have hard assets. They don't buy buildings. They don't, they're a subscription model. A few people disjointed across the world with their laptops can run a company like this and getting billions of dollars. And now these companies are on the hook for this money. Now, fortunately, it wasn't in our bigger overall banking system. Otherwise, I think we would have a way bigger issue going on right now. The second, right? Let's see. So Priyanka, I'm telling you, right? Priyanka, look it up. The SaaS model is failing mainly because of AI, because companies can now build their own software that they were paying for. I'll give you an example. A friend of mine, who runs a company, he used to use a specific CRM, and over a weekend, he coded his own and built his own, and now his company runs on his own. Appfolio was a SaaS company that is losing market share. And so until SaaS integrates AI, and even then, you don't need it as much. Companies like Replit, Lovable, they are able to just take a company's product and rebuild it in seconds. And that's why you're seeing these major SaaS companies fail, and why, it's not me saying this, it's the returns from SaaS companies proving it. It ain't me saying it. It's what their bottom line says. You don't got to take my word. We can argue about facts, but the facts won't argue on that. Now, the next major force in the market right now is housing issues. Foreclosures are up 32% year over year from January to now. January last year to January of this year. 32% increase in foreclosures. 1 in 3,248 homes are being foreclosed on right now. In Lakeland, Florida, which is just like 30, 40 minutes down the road from me, it's 1 in 1,200 homes have been foreclosed on. We have eclipsed the pre-foreclosure rate of 2008 already this year. And the biggest groups are FHA loans and VA loans. The biggest states are Texas, Florida, Tennessee, where everybody was moving to, are now seeing some of the highest markets that we're seeing foreclosures on. Now, that has a bigger influx of employment issues and high interest rates and things like that. But there could be we're already seeing it here. There's, my wife and I have been looking at homes for about a year or so, and I just had this inkling to wait. And so we waited, and I've been looking at specific homes that are down $30,000, $40,000, $50,000, $70,000. They're cutting their price by because nobody's buying them. So it's very interesting here, right? Software as service, Jonas. Software as service, SaaS. And then the 5 wars. Now, yes or no? How many of you in here have ever heard of the 5 wars? Yes or no? No. Yes. No. I know somebody who was in here in my session the other day in the mastermind. Okay, good. So I didn't want to bore you guys with this, and I'm not going to try to. I'm going to try to go through this very quickly. But there are 5 types of wars that a country can be in. Okay, and we're going to go through them. All right. So let's see. What is this about today? Rashawn, I'm not sure what you're asking about there, but here we go. So Brandon said yes in the mastermind. I love it, Brandon. Good to see you, buddy. And great to meet you as well. So the first is, the 5 types of wars. The first is military. Military war that we're in right now, we know, is Iran, right? We know that is happening. We know there is strategic bombing. We know that it started on Saturday at 1:30 in the morning is when we first dropped the first bombs in there. They've retaliated, firing missiles on other countries, and so we will see. Now, it may help that the Ayatollah perhaps is passed away. I didn't see anything confirming that this week, but and we have many off ramps. So if we get new leadership in there, this conflict could be very, very quick, right? This conflict could be very, very quick, or it could be over. Now, here's the next thing. Is we can I know the Straits of Hormuz have been closed, so that is going to be another issue. So we'll see how long this escalates. Okay, the next is tech wars, right? We know the tech wars, which is around AI and chip manufacturing and things like that. The next are trade wars. Okay, the next are trade wars. Okay, trade wars, meaning what's going on with tariffs, right? We saw tariffs in, tariffs out, tariffs legal, tariffs illegal. That's just part of the trade wars. How much chips can Nvidia sell to a country like China, and then China getting a hold of the current Blackwell chips and all sorts of different things happening with those trade wars as well. Capital wars. We've talked about before, but U.S. bonds, right? How it used to work from I can say the 1950s to today is that whenever we had a trade deficit with the country, so let's say the US was trading with Japan and we had a trade deficit with Japan, meaning they had a surplus of money. Well, what they would do with that surplus of money is then go and buy US bonds, and which would we would then be able to issue more debt and we were able to spend more money. And that's how the world worked for a long, long time. Up until kind of we left the when we left the trade deal with China and Asian countries, and then NAFTA. And then we reworked some of those deals and we created phase one and phase two of the US China trade deal, which ended under his first term. And then it kind of just was flat for a little bit. And then new trade deals occurred with around these tariffs and things like that. And we're going to talk a little bit more around those tariffs as well. But this US bond market, China used to hold $1.27 trillion worth of bonds, and they have called 500 and something billion dollars worth of those bonds, meaning we paid them that cash back from that bond. And now we're reissuing new bonds, which is a very interesting thing. And right now, who's buying our bonds? Because China isn't, Japan hasn't, Canada, Europe. It's actually off. All we know, and I showed you guys this in a previous session, is that there is private equity and private capital that are purchasing U.S. bonds in large quantities, and it's through private organizations. We don't know much where they're coming from or what countries the money's coming from, but we know they are being purchased. So then you have geopolitical wars, which is more so like a Russia-Ukraine situation, right? A Russia-Ukraine situation where we are in the middle of helping and negotiating this to hopefully broker peace in Europe as well, right? So no, wouldn't be Buffett. Let's see. So that's the 5 types of wars, and there's an example of each if you never have noticed them. And Dennis, that's because no one is gonna buy anything at lower rates. That's just it, right? So that's the 5 types of wars, and we have them going on right now that a country would enter. And if you want to screenshot that, feel free. We're going to move on here in just a second, and I'm going to show you guys a couple other quick news things. Then we're going to take a dive into the market and look at a few different things here today. So let's jump in now to a few other things happening in the world. So first, we have the U.S. Israel launching attacks on for a regime change in Iran. The supreme leader Ali Khamenei has been killed, and Israel said that it has also killed the commander of the Islamic Revolutionary Guard Corps and the defense minister as well. Trump also said that has confirmed a large amount of this leadership has happened. Commercial ship traffic through Straits of Hormuz has been slowed and closed off now. AI, let's go into that topic really quickly. NVIDIA is set to unveil a new Grok design chip focused on AI interface computing at upcoming G2C. And then OpenAI has already agreed to be a part of that. And Anthropic is suing is gonna challenge the Pentagon's decision in court to label it a supply chain risk to national security, simply because Anthropic said we won't give you we won't open up everything that AI can do, so you can build weapons around it and surveillance stuff. But then OpenAI said, hey, we gotta sign our contract. And so they agreed to that. Block is eliminating 40% of the workforce, which is crazy when you think about that. 40% of their staff gone. 40% of their staff. It says some of it's because of AI, but also some of it's mismanagement and overhiring. Then let's see, Amazon employees highlight mounting pressure and slumping morale following big job cuts and they don't see AI doing anyone's job. This is an interesting thing as well. Then Blackstone is launching a publicly traded acquisition company to invest in already built and leased data centers. So we may see that as well. So a whole lot of news happening in this market. We're also seeing a challenge to the tariffs. And there's actually something new that came out this morning that I was reading about, and I found the article again. But since these 15% tariffs came out, what companies have figured out they can do is they can found a way to work around some of the tariff. And how they do that is the manufacturer typically sells to a middle person, and the middle person sells to the American company. The American company then imports it, and they pay the tariff when it reaches the port in America. So if China sold the couch, let's say this in this example that they use, to the middleman for $200, and then the company bought it for $300, instead of having to pay, a 50% tariff, which would be $150, they only have to pay 50% on the $200, and that's called the first sale, not the in sale. And so they've worked around some of that tariffs, and that could help push inflation lower with that workaround. Okay. With that workaround. So we'll see how that happens. And then the other thing that I saw this weekend was this. Apparently, there are 2,000 lawsuits happening around tariffs because companies are going to have to sue in order to get the refunds back from the tariffs that were deemed illegal. So, you know who wins in all of this? You know what company, you know who I wish I could invest in? Morgan and Morgan or any other law company. I promise you, the lawyers will win at the end of the day. Okay. That's the company I wish we could invest in. But hey, none of them publicly traded yet. Well, I'm sure one of these days. So that's it for the news stuff. But what that it leads me to is stuff that we want to pay attention to, right? We have the usual suspects and companies that we're in. We're definitely going to look at PPTA because we are $1.14 away from hitting our limit on PPTA. So we'll talk a little bit about that. And we will look at, actually, we've already exceeded our limit on PPTA. So that is a closeout. We're going to move that into the closeout section. I'm going to X that so we can close our PPTA trade. So anybody that's been in PPTA, feel free to get out of it. 3.2.26, or if you could have gotten out of it already, you might have. And let me just do that. And there was our close on that. So that one we'll be looking to replace. We're going to talk a little bit about MicroStrategy, some things that are a little worrying on that. But again, we have very little exposure to it, so I'm not too worried. Netflix was a great trade, but we will get into silver as well. So go ahead and let me know any stocks that you want to see traded here today, and I will throw a few of them in there for us as well. So HON, Alibaba, Palantir, Nvidia, Amazon, Axon, AM, AXON, Under Armour, that's an oldie but goodie. ASTS, AVGO, Apple. We'll talk a little bit about Apple, AMAT, Google, and Pound-Yen. Let's see. William, I am a little, not a ton. Verizon, Tesla. All right, perfect. So, first stock I want to get into is Lululemon. Let's jump in there really quickly. Well, actually, you know what? I have Netflix up. Let's talk a little bit of Netflix. So, a couple of weeks ago, we talked in here, and I said, "Hey, look, I would not mind owning Netflix at like 77 bucks." Right? I said it. We were in there. We're in here. I put it on our list as a buy. And well, 96.24. Right. I said that Paramount deal would get done, and it did get done. Not the way that they wanted it to, but it actually probably saved Netflix a whole lot of loss. Because one of the things that I noticed, and I noticed this with Disney, is when Disney bought a lot of Fox's stuff and Warner Brothers stuff, they couldn't really use it. It didn't become good, right? Because it was just a waste of cash to get like one good asset out of it. And so they ended up still haven't recovered from that yet. And so I was not a big proponent of the the purchase for Warner Brothers material, but Paramount ended up beating them out, backed by Larry Ellison and his family. And so there you go, right? Our short term target on this was right at $100. Well, we're about $3.75 away from hitting that $100. And my long-term target was this small gap in here at 107.41. Now, I will tell you, if you're in Palantir, if you're in Netflix, sorry, Olga wrote Palantir and I read it and that just hit my brain. So if you're in Netflix right now, one of the things I would look to I'm just going to let you know is I anticipate a pullback in it over the next couple of days before we see a rally back up. So if you're in it, maybe lock in some of your profit. If you're not, then you may have an opportunity to enter in at around 86.72 before it runs up to that 106 number. All right. Now, I'm going to run through one more of these and we'll do Lululemon. And then I want to bring Josh on because he's got something I can't wait to see, for all of you guys to see. So, as you guys know, I use Fibonacci's. Fibonacci's are something that I truly believe in, and I've been using them for my entire career in trading education. But Lululemon, we had a major up A, B, C, D swing. We saw that there was a gap here right at the C retracement. The market pulled back and gave us an 8.6 pullback, and we're looking to go up to the 1.18. And I have my D extension set just a little bit above that at a level of support and resistance at 233.60. That's where I'm holding Lululemon to. That's where I know Lululemon could go to. And that is one of the great opportunities here. Now, we do fibs manually in here, Josh, and I know you got some stuff that you're going to share with people, but what I'd love for you to do is I'm going to stop sharing for a second, and if you could bring up Lululemon and show some analysis on it, I'd absolutely love to get your opinion in there.
Yeah, of course. I'll be honored to. Let me go ahead and bring it up. So we'll go LULU. And so what James is referring to is inside of the trading view, you are able to automate and you are able to utilize the Fibonacci retracement tool manually. But what we ended up doing is we automated the process. And one of the things which I like to do is I like to do a top-down analysis. Well, I like to look at the big picture, long-term, of what the heck's happening. And so if we take a look at the monthly time frame, kind of draw our trend lines a little bit backwards, just try to see if we're on a known level U-turn. One of the things that we're seeing on Lululemon is that we have a very, very strong area of resistance which can act as support. Now, I don't know why this market is bouncing at this level, but it is. So that's a very, very strong convergence. Now, here's the cool thing that we have. We have what's called one-click fibs, and these one-click fibs will automate the overall Fibonacci sequence for us. And with a one-click just like that, what it will do, this will tell us the Fibonacci sequence, and then it will automatically update. So let me kind of see if I can get the replay to kind of show you how this works a little bit. But can everybody see this chart on my screen? Did everybody see the 1, 2 boundary, the 3, then the 4? It's very similar to the A, B, C, D. I just call it 1, 2, 3, 4. And so what I like about this, it will give us our stop price, it will give us our limit price, and then it will, as the candlesticks go by one, it'll kind of grow a little bit. And in this particular scenario, it looks as if the replay, because of the monthly bar, it's going to be a little delay, but that's fine. But ultimately, what it will do is it will go 1, 2, 3, 4. When the Fibonacci is hit, the market retraces. 1, 2, 3, 4. When the Fibonacci extension is hit, market retraces. And so according to the latest Fibonacci, and if we just show the most recent one only, here's what I see, which is a massive, massive reward compared to risk. According to Fibonacci sequence, we are at the 88.6 retracement, making the extension the 1.127. And so what it really means is if we place our stop at the right below the one boundary at price point 115.29, we place our limit where Fibonacci say to place our limit, you are having a massive reward compared to the risk. To be specific, from where we currently are right now, the reward is 3.6 times the risk. Now, this right here is relatively strong. Now, this is just a monthly time frame, and this will take quite a while, but long term, if support can hold, you're looking at about 136% bullish upside. Now, what I like to do is now take that information and bring it to a smaller time frame, and that's what we're going to do. And let's go to a 1 hour time frame, and then let's take a look at LULU. It's a little bit smaller, but it kind of gives us the smaller wave movements between where we currently are now to where we expect the market to go. And if we take a look at the 1 hour time frame, we do the same exact thing, which is put our one-click fib starting from where the trend began. The latest Fibonacci sequence let us know that we have a 1, 2, 3, 4, 1, 2, 3, 4. The Fibonacci 1 was taken out. We'll start it from here, work our way up. And so what we're going to be looking for, according to this sequence, is a rally from where we currently are to price point 194.98, and that will be about a 5.32% bullish move. So if support can hold, and if we draw our trend lines going backwards on the 1 hour time frame, I'll kind of bring this all together and kind of circle it back. So here's what I see, James. I see monthly time frame, big picture in the buy zone on support, hitting an angle that pushed the market up 1, 2 times prior, and then pushed the market down 1, 2, 3 times prior. On the monthly time frame, there is a very large bullish swing to where if support holds long term, you're looking at 136.23% upside. Shorter term, when we go to the 1 hour time frame, we are in the buy zone. We are making higher highs and higher lows, and buyers are pushing the market up at, on, and or around this blue line. And then according to the Fibonacci specifically, we're looking at price point 194.98, which would be about a 5.42% move or a $9.75 underlying asset move. Hey, Mark, glad to see you in the room.
Mark, my man, good to see you. Josh, another stock that I know we were going to look at anyway, and since you have the screen, I'd love for you to bring it up and look at it, is SLV, which is silver, or you can do silver futures, either or.
Okay.
Yep. Whatever you're more comfortable with.
What do you guys want? You guys want to look at silver futures? You guys want to look at SLV? SLV? Okay. All right. So let's go to the daily time frame on SLV because we're very, very strong. We can do both. It's going to be very, very similar. Yep. You get a little bit more action on the future side just because you're dealing with a 23-hour market. But we'll apply the one-click fibs starting from the low of April of 2025. And when we do this, we have 1, 2, 3, 4, 5, 6, 7, 8 Fibonacci. It worked 7 out of 8. So we had a 7 Fibonacci run, and then the 8th one failed. And a lot of it was due to that 40+% retracement in the single day, which was out of control. Currently, right now, with this market bouncing with the lows of February 26th, we are starting to extend and take out the previous highs. Now, there's not a proper high. So what I like about this tool is that when you apply the Fibonacci sequence, if there's no fractal high, it will tell you, hey, we're waiting for the two boundary to form. And so what I want to do is I'll take this information, just acknowledge we have a bullish push, but I'll go to SLV on a 1 hour time frame. Let's just track the overall bullish trend off the 1 hour time frame and see if we can project where the market could go next. Now, there are a couple of things that you want to bring just normal attention, which is going to be where the market generally likes to U-turn. I'm a big believer in that. I'm a technical analyst. I really enjoy the technical side. And so we have a little angle of resistance that we just broke. So the market was selling off at this blue level, and we just broke above that, really scoring some really strong points for the buyers. And so if you were to apply the Fibonacci sequence, you have 1, 2 Fibonacci's that have already worked. We are on Fibonacci sequence number 3, but we're very, very close to the target, which is 86.39. And so let me just do this really quick, just so that we can do a side-by-side comparison. We will go to SI, which is the silver futures, a little bit more of a cleaner charts because the 23-hour market. And let's go ahead and do the same thing. Let's just see if there's any difference. We'll go from the April 2025 lows. Again, you got your 7 or so, you got your 6 Fibonacci's in a row. Number 7 failed, the 1 was taken out. But here you got a sequence, the latest sequence. And this is really, really nice to see. You have a 1 boundary, a 2 boundary, 618 retracement, extension is 1.618. So 99.85 is the target. So on silver, we are going to expect about an 849 tick rally towards the north, which is about a 4.45%. Now, here's the thing with silver. If you trade a full contract, James, was it $25 a tick?
Yes, I believe it is. Let me just double check.
Yes, 25. So it's about a $21,000 buying opportunity if you can handle the risk. But right now, it's relatively strong. Freedom says 100 is a psychological level. Agreed. It'll probably pop that, probably just hit it. But 99.85 is going to be a strong, strong target on the silver future side. Now, if we double check the 1 hour time frame, let's just put the Fibonacci sequence. Let me go ahead and just quickly mark 99.85 is going to be the daily Fibonacci target. And that's going to be about 880 ticks above. And let's go ahead and put the one-click fibs on, starting from the February of 2026 low. So that's February 17th. And according to the Fibonacci's, let me go ahead and mark this. We'll make this light blue. This will be 99.85. So this is the end goal in mind, but look what just happened. We just hit the Fibonacci extension, which was right around 95 or not, yeah, right around $95. So if we were to kind of look at the basic structure of the market, draw our trend lines going backwards, finding out the support area, copying the angle, finding the resistance angle, you're at the top of the channel. Do me a favor, type in the yes in the question section box if you can see. You're at the top of the blue level that has a history pushing the market down. Now, it's not guaranteed, right? But this is what I will be waiting for. I would be looking for either A, for me to buy this market, I like to buy low. So for me, let the market retrace, let it find support, buy it up again. And frankly, you have a bigger opportunity because if it falls to support, now you're looking at 1883, 1,883 ticks at $25 a tick. That's $47,000 of market movement. And you may say 47,000. Yeah, this thing's cranking since Thursday, February 26th. From that low to this high, that was a 2,135 tick move. That was a $53,000 move with one contract. Type in ME in the question section box. If you'd be happy with half of that. And so according to the Fibonacci's, which we're tracking, of the one click, 1, 2, 3, 4. We're on our fourth Fibonacci that has already worked in a row. Now, here's what I really like about this tool. We enabled the historical price movement so we can get an idea of what the max opportunity was previously. Now, here's what I mean. And so the first Fibonacci sequence would have provided max 499 ticks, which is $12,475 of upside with one contract. Second Fibonacci, you could have made $17,000. Third Fibonacci, you could have made $25,000. Fourth Fibonacci, you could have made $48,000. So if there's a pending $50,000 move, that's not, how do you say, it's not unfathomable. It's not unreasonable to sit here and say there's a $50,000 move coming if this market can move from here to there and set us up like it has already done 1, 2, 3, 4 times prior. So yeah, this is a good one. You got another one, or I don't want to
Yeah,
take. I mean,
absolutely. No,
yeah.
no, no. I'm gonna keep it rolling. Let's take a look at let's go Alibaba.
Okay, what is that ticker symbol?
BABA.
BA. Oh yeah, good old Baba.
Yeah.
BA. Okay, so you can short with Fibonacci's. Absolutely, you can. I like. There's nothing wrong with it. For me personally, I I just enjoy buying more than I enjoy selling. So my preference is more buying. I traded the Forex market for about 10 calendar years and spent many months selling and shorting currencies versus the other currencies. But when it comes to stocks and futures, um, we tend to see upward momentum unless you're looking at like an inverse opportunity. All right, so when we take a look at the monthly time frame, you can see clearly we're in an uptrend and we're making higher highs and higher lows. So big picture, as long as support holds, right? As long as support holds, we could have a relatively strong press. Now, if we put on our Fibonacci's starting from the lows of October 2022, and we just kind of see what we're dealing with, we are on our second Fibonacci sequence. Now we have a current 618 retracement making the extension to the 1.618. Now, for me, I really like this because this saves so much time with manually drawing these targets. But anyways, the next target from where we currently are now is 198.98. That is about a 38.66% bullish upside. So 198.98, which is going to be the monthly Fibonacci extension. And so that's going to be how far we said? About 39% away. And so let me just double check that. And then what I want to do is I want to then create a plan for the smaller time frame, this 37.77. So it's 37.77 away. Okay. So in a situation like this, what we can do is we can go to a smaller time frame. And I like going to the smaller time frames purely to look for confirmation, to look for the zones, momentum, buy zone, sell zones, right? And so if this is BABA on a 1 hour time frame, and we apply the end goal in mind, which is the monthly target, which will be 198.98, we can clearly see that we're in a bear trend. The momentum is still bearish. But according to the bigger picture, right, this bearish trend won't last forever, and we are on a monthly support, which could push the market up. Now, this monthly support pushed the market up 1, 2, 3 times prior. Is it exactly where we are right now? No, it's not exact. These support levels are usually just kind of boundary driven. But another thing that we could do is we could draw another trend line going backwards, and you can clearly see that we're at the angle where buyers normally, or where the market normally U-turns. Do me a favor, type in yes in the question section box if you can see and acknowledge we're on a U-turn level. There's resistance, which could act as support and press this market back up. So a lot of this is just being aware and making a decision on what we want to do. And so I agree currently, right now, the sellers have been bringing the market down. However, what we could do is say, well, let's just see if that monthly support will hold. And if the monthly support does hold, then we could see the market break into the buy zone. If it does, then we could create that bullish momentum. However, Fibonacci's work on the way down the same way as they do on the way up, but opposite. So what you would do with one-click fibs is you just place your Fibonacci's from where the trend began, choose short, and then here you can see the next Fibonacci extension, we're on a third one, will be 139.46. And if I was a betting man, which I am, I'm a trader, I would bet that Alibaba will more than likely continue to sell off towards 139.46. And then, which is interesting with these Fibonacci's, if the buyers are to take control, they normally take control after a Fibonacci extension is hit. And then I would wait for the market, get into the buy zone, where I would look for that bigger 37+% rally. Now, granted, there's other things that could take place. We could sell off one more time, but for me, the trigger would be a low price in the buy zone. You got another one?
Yep, let's take a look at ES. I think a lot of people would love to know kind of, where the ES or NQ, whichever one you want to look at first.
Well, what do you guys want to do? You want to do ES or NQ first? ES is the S&P 500 for futures. NQ is the NASDAQ 100. We're going to look at them both. Okay, so majority rules, we'll do ES first.
Okay, perfect.
All right, so big picture, let's go to a daily time frame to start out with. So one of the things which, for me, I personally believe that, especially if you're going to be a futures trader, just buy indexes, right? Because indexes tend to go up over time. Not all the time, but up to this point, we have a 100% recovery rate, and they've never gone to zero. Now, granted, anything can happen. There's no guarantees, no 100%. But if the S&P 500 went to zero, we'd have bigger issues on our hands than just losing money. And when I look at something like this, what I like to do is just a typical process, draw my trend lines going backwards and try to find known levels of U-turn. And so when I do this, I see right away that we are, since April of 2025, where Trump said we're going to go to fixed 10% tariffs and deals started to be made. That's when the recovery started to take place. The market started to see a support level that has continued to U-turn the market, which came from past resistance becoming future support. Now, if the market stays above this blue level, then absolutely we will anticipate the buyers to take over. And really what it will require is a catalyst. So just like how last year, January, February, March, half of April, tariffs sold the market off, there was the tariff sell-off, and then strong catalysts occurred, and there was a tariff rally. And so in this particular scenario, we got a war, right, with the United States, in theory, with Iran. It would just require hey, we have peace, and here's the new regime, and here's the new progress, and so on and so forth. Some sort of positive news to make people excited could bring this right back up, right? And so you got to kind of keep that in mind when it comes to these indexes. Now, when we mirror our resistance level, we just have a basic structure to where if this market were to move or stay within this range of the bottom blue level, could press to the top blue level, and that would be price point, we'll say daily resistance, and that would be price point 7169.50. And if we do press, then we're looking at a 1399 tick rally, okay? So about 1399 ticks above. Now, here's the thing. If we break into the sell zone, we could absolutely get into a bearish trend, and we'll just have to address it then. But we can't. Part of dividing the market into buy zone, sell zones, and finding the U-turns is to listen to the market, because the argument could have been February 17th, February 6th, November 20th, right? August the 4th, which says, oh, we could have broken bearish, but if you stay true to support and resistance, that's kind of the process. Now, when we put on the one-click fibs to kind of guide us long-term, which really gives us, in my opinion, the best stops, get your stop out of the structure, we do have 1, 2, 3 Fibonacci's that have already worked. And if you take a look at the Fibonacci historical risk versus reward, these are relatively strong upsides. So the first Fibonacci max opportunity was $41,600 with an E-mini contract. Second Fibonacci could have produced $38,000. The third one just came off a $27,000. And so this fourth one is showing a bullish upside of 27,462.50 from where we currently are now, right? Which is actually less than the last three opportunities. So for me, that becomes relatively realistic. Now, what we want to do is we want to try to prevent risk, right? We want to lower our risk. And one of the ways I like to try to lower risk is I will look at the daily time frame, look at a low price, and find the known levels of U-turn, and then make sure that we're not hitting Fibonacci extension, but then go to the smaller time frame and look for an entry with smaller risk. And so if I go to the smaller time frame and I bring up the S&P 500 and I just divide the market into buy zone, sell zone, really, I'm not needing to take action today. I'm not needing to buy today. I'm not needing to sell today. What I need to do is I need to win my next trade. Type in a yes in the question section box if you would agree. We just need to win our next trade. And so if we go to the 1 hour time frame, we just say, okay, here's the deal. This market is at a layer of support from the daily time frame. And according to the daily time frame, we're at, on, and or around the angle where the market likes to go up. And sometimes the market goes up on the blue line. Sometimes it goes up below the blue line. Sometimes it goes up just above it. And so for me, I look at this, just say, okay, well, let me just bring in this counter trend line and just make life a little bit simpler and just say this. If this market can break and close above this counter trend line and give me a low price, then I will buy the market. And I'll start using Fibonacci's on the way up from now, 4,399 ticks. Now, if this market breaks into the sell zone, then there's no buy trade. Type in a yes in the question section box. Understand that we're in the line in the sand. Like we're at a playground that says if you cross this line, you're in trouble, right? So this blue line, where either support's going to hold or is not. And so it's a very, very clean opportunity. All right, let's take a look at the next one, and that was the Nasdaq.
Yep. Before you get to that, Josh, I want to
Yes.
do this while we're in here because I know this week you have a 3-day event coming up that's going to be taking a deep dive into fibs. They're also going to be able to get access to your next prediction, which I'm looking at here. 200. Let me just make sure the comma's in the right spot. You correct me if I'm wrong. $253,612 prediction. And guys, I don't know if you saw it earlier. He has a 92% historical prediction rate. So you're doing that this upcoming week, correct?
Yeah, so a couple of things. I'm glad you brought it up. So Tuesday, Wednesday, so just kind of give everybody an idea. I've been using Fibonacci's realistically since 2009, and so I love them. And what I've been doing is I've been tracking them. And so you can see here's the before, there's the down Fibonacci, there's the after. Look how the market hits the Fibonacci extension and then bounces, okay? And so here is, oh, shoot. Here is example number 2, right? So this one, support hits, there's the before, there's the bounce, there's the after. Let's do another one. Here is, what are these worth? Oh, so because this one's worth 3,438 ticks. Okay, so what is that worth? 3,438 ticks times it by $12.50. This one prediction is worth 42,975 US dollars. And so there's the Fibonacci, there's the before, there's the uptrend, and then there's the target, and then that's what the market did. And so in regards to history, I have 214 publicly posted trading ideas on TradingView. 197 of them have hit their price targets. 8 of them were wrong. And so which ones were wrong when I shorted the market? So do me a favor, type in a yes in the question section box if you would agree that if you won all your long trades, you would just stop selling the market, right? And so, yeah, this goes back to 2020. And so I'm showing you the history of this, and it's all documented here. I got all the before and after. So anyways, we found some really big opportunities inside of the NASDAQ and the S&P 500. And so what I do is I don't keep this to myself. Number one, I publish it and I post it publicly, but then I will host a 3-day workshop. So if you want to join the 3-day workshop, James went ahead and posted the link in the question section box. Go ahead and click on that link, fill this information out, and a couple things will take place. Number one, it's going to be Tuesday, Wednesday, and Thursday of next week. And I'll take you into the live market and I'll have a dedicated 3 days with you from 12 p.m. to 2 p.m. Eastern time, where I will teach and educate you Fibonacci's from start to finish. Furthermore, I'll outline the trading ideas. Furthermore, when you do it, I will send you a ebook, and this ebook will have links to my charts. So you will have the research beforehand. And then also you get access to some training videos leading up to it. And so, okay, perfect. If you, and that this naturally this
To register. This is it. I learned Fibonacci's the same way he did, and he has been doing it Fibonacci's and stuck with the same routine for decades now, nearly 2 decades. When you think about it, 2008, if you think about it, almost 20 years. Man, we are getting old, Josh.
I know.
So look, he is going to be, this is an amazing 3-day event that he's going to be doing 2 hours a day for 3 days, 12 to 2. So go ahead, use that link, guys, get registered, absolutely free. We wanted to make it affordable, so we put it as free. So,
Right. Well, this is where the rubber meets the road, right? Because this is where we can really showcase our skill set. Because at the end of the day, look, we've been doing this for a long time, and we're not perfect, but we have the track records to show what we can do. And though nothing is guaranteed, this is a pretty big opportunity, and we don't want to miss it. And one of the things that we don't like is we don't like it when someone goes, well, I didn't know, I didn't know. And so that's one of the things that we host these sessions and we spend 3 days with you, is to help you. And a lot of this is also finding the approach that fits your personality, because some of you, if you're not comfortable with entering into the market or don't know how to enter into the market, you're going to miss it. And so to be able to answer questions, to be able to demonstrate those questions and to bridge that gap into where you can borrow our experience, is a really big deal. And yes, Jonas, those sessions are recorded, but you're going to definitely need to, register for it. You need to click on that link. It is at Eastern, so Florida time. So we're located in Florida. So it'll be from 12 p.m. Eastern time, same as New York time, 12 p.m. to 2 p.m. All right, so real quick, we have the NASDAQ 100, massive opportunity on NASDAQ. Very, very similar to S&P, just a bigger mover, right? You're right on support. This has worked very, very well for us. There's support, there's resistance. If this market just does what it's been doing the last 1, 2, 3, 4, 5, 6 times prior, the target here will be close to an all-time high resistance, which it will be 26558.75. Now, you may say, but we're in a war. I don't disagree with you, but a catalyst that brings the market down, this could be a very, very quick thing. And all it will require is a catalyst to bring the market up, which we've seen happen over and over and over again. Plus, it's an index. And so this by itself is 7,001 ticks, right? About 7,001 ticks. Now, granted, I can't say we're bearish until we close below this blue level, because that's just the philosophy that I utilize. But if you are viewing this 7,000 and one ticks times it by $5 a tick, that's $35,000 of opportunity. Type in a M-E in the question section box. You're pretty happy making half of this. Not the whole $35,000, but half of this. This has already worked a handful of times prior. So it's just one of those scenarios of just being aware and then getting ahead of it. So with this, what I like to do is I like confirmation. I don't like to just jump in just because. I like confirmation. So I will just go to the 1 hour time frame, and then I'm going to divide the market into buy zone, sell zone. I'm going to mark my support levels, and there's support. We got a little bit of resistance right here that's starting to form, right? And then here's the end goal of mine, which will be, let's go ahead and bring in that resistance level, copy. And let's mark that. That's going to be 2658.75. And all I want this market to do is just break and close above that purple line. And then what I can do is start using my Fibonacci's from the wave movement, and then ideally it'll break above. Now, long term, when we put our Fibonacci's on, the bigger opportunity will be, and this will be 12 months plus, price point 28484. That's about 14,407 ticks. Now, this is what I really love about Fibonacci's, which is when or if the market touches the extension, not always, but usually the market retraces almost to the penny. And so I really want you to see this because it's very, very impressive. If we were to take a look at what happens when the Fibonacci extension is hit, normally what happens is what's called a fractal high. And a fractal high is a retracement where you have two candles to the right, two candles to the left. And so here's what's interesting. Here's where we are. We're going to expect the market to rally 10,938 ticks to that specific price point of 23949 and then pull back. And so imagine you're buying the market and you're saying, well, I don't know when this trend could end. Well, there's no guarantees or 100% or absolutes, but notice how the market just hit this Fibonacci extension, and then we're going to expect the market to pull back. Type in a yes in the question section box if you see that the Fibonacci extension helped identify that high price, which really means helps us get. Now, if you really think about it, that extension that helped you avoid or be aware of a 4,000 plus tick retracement. And then this is just kind of how it works. This is why I like them so much. And this is why they've been so accurate over the years. And so here, when or if the market hits the Fibonacci extension, there it is. What we will do is we'll say, okay, time to take our profit, get out of the trade, and then the market retraces like so. And so again, the tool, which I like a lot, the tool can help us understand what our max opportunity is. So first Fibonacci was 69,000, second Fibonacci 64,000, third Fibonacci 62,000, and then where we currently are right now, there is 72,000 remaining to be had. Now, whether someone takes action or not is up to them, but I'm looking to take action, and we're going to have our 3-day workshop to kind of discuss the plan.
Absolutely love it, Josh. And I appreciate you for coming here tonight, guys. We're gonna begin to wrap things up. I'm gonna run through like one or two more stocks, and then I'm gonna wrap this up because I want to share a couple really quickly for everybody in there. One being Nvidia, Tesla. Or one being, sorry, AVGO and ASTS. Why? Because we have earnings coming up, right? ASTS, we have earnings coming up on. So I'm going to run through this one really quickly. Look, we can see on the daily time frame, if we see that gap that's in here at $92.83. ASTS, I know they're supposed to have their launch. I don't know how that went. Was not paying attention to. So as Josh had talked about, you can use fibs in an upside and a downside, right? I'm going to look at the downside going from the fractal high to the fractal low. We do have a Fibonacci downward de-extension. I'm not looking to short this, but I'm not looking to buy this until it fulfills this de-extension at 67.53. if this is going to continue to rally. This is one of those suspect stocks. Why? Because look, they haven't been around for a long time. They haven't really had any many profitable quarters, unlike a stock like Zoom that has never not been profitable. Or one quarter they've missed profit, right? One quarter they had a surprise on earnings, and they missed it by 4 cents per share, and they got absolutely destroyed because of that. And hopefully you guys listened to me when I told you to get out of that, because who knew that that was going to happen this last quarter. But we want to make sure that ASTS, I'm not holding it, I'm not looking for it. But if earnings do come out and do report better than expected earnings, right? If they're only looking at $41.77 million for revenue, and earnings per share is a loss of 17.2 cents. So if they lose 16 cents, expect this thing to launch up a little bit higher and fill that gap at 93. If they are worse than expected, expect this thing to go down to 67.53 in or around that number. AVGO, that is another one. This is going to be an interesting quarter. I'm going to go ahead and tell you exactly what I predicted, and I'm going to use this as in a video, so be prepared to hear this again. But with NVIDIA, I had said that they may have better than expected earnings, but worse forward outlook and guidance. And that's exactly what affected NVIDIA. Why it fell, why it didn't have that major pop up is because of the forward guidance. The main reason why I'm a little bit iffy on Broadcom is because of the largest data center being built right now in the nation, which would be the one out in Texas. I think it's called Stargate, if I'm not mistaken. But what we have happening is Oracle, SoftBank, and OpenAI, they're sitting there arguing about who does what and who controls what when it comes to this data center. So yes, shovels broke the ground, but dirt ain't been moved. Let me just say it in plain old country English. Dirt ain't been moved yet. So they are not, right? We're seeing delays. Okay, right now it's already a 6-month delay. Who knows again if there's a delay? And a lot of this massive bull run was based on this AI data center, outlook. Then you also have, and we talked about this last time, and Josh, I know you're going to laugh at this, so feel free. I said that for the first time in the history of probably the universe, Bernie Sanders and Ron DeSantis 100% agree that we need to pause this data center stuff. That happened last month in February, and that's what caused the deep freeze and the snowstorm and snowmageddon and all this crazy winter weather, is that hell froze over when they agreed on one thing. So because of that, I am looking at this as like a hey, look, we filled the gaps. Things are okay. But are we done yet with this correction? Are we done yet? Are there any other major gaps that exist right now in the market? Well, yes, there's one down here. There's one down here. There is one. Let me lock my drawing tool. There's one there as well. There's one here, and that was one, and we filled that gap already. Now we do have a gap to the north that will get filled, and I'm undoubtedly of the belief that that will get filled. And if I look here to my fractal low to high, well, we have a gap right at 255.19, and the D extension for this Fibonacci, this down fib, is 263.83. So I'm not looking to buy this just yet. Now, do I expect them to beat earnings again? Yes, I do. And maybe they could rise as high as 319 or 329. Do I expect them to rally up to 395? No, I don't. More than likely, we will see a continuation of a push down in this area, mainly just because of kind of what Josh showed you, right? Work your trend lines backwards. And if we do so, look at that, right? We have an area of where it may bounce off of. Right? We can see that, we understand that, and that makes sense. And so if this does break through, we know we're going to 263.83. If this doesn't break through, then perhaps we will see a rise back up to 335 in that support and resistance level. Last company, Apple, mainly because I don't want people to get sucked into what's about to happen. Apple is going to be announcing new products over 3 days. Let me tell you what has happened historically for the last umpteen years since I was knee high to a grasshopper and Apple was releasing stocks or releasing new products, because these products don't make pigs fly, cure cancer, figure out how for us to travel to Mars, unify gravity with time so we may create a time machine. Because it doesn't do all of that, people hate it and they think it's not going to sell and it's going to stink. And so what we'll probably see out of Apple for the next 3 to 5 days is Apple fall. Okay. Apple fall. So, Mark, I do too, right? I do too. I just think it's crazy that they agreed on something for the first time ever. But because they, because Apple, these products don't do everything in the world under the sun, we'll more than likely see a fall in Apple, and then Apple resume the rally when people come to their senses and realize that people are going to buy it, like me, because I have everything Apple. So now with that, Josh, first and foremost, on behalf of everybody here on this Sunday session call, and greatly for myself, I really appreciate you coming in, sharing your knowledge, and giving away that 3-day event that you're going to be having. I'm going to send that link out one more time right now for anybody that did not get it. Guys, go ahead, click the link and join. But I appreciate you being here, Josh. I really, really do.
Oh, it's my honor, and thank you so much. Or it's not my honor; it's my yeah. It's I'm grateful for the opportunity, and thank you for having me on. I think this session is incredible. Man, you went through the five wars, you went through the news, you went through the articles, you went through the requests, you went through the market one by one. This is a really, really cool, informative, but action-taking session, and so. Me as a person, I will more than likely be just watching as an attendee moving forward. But I really appreciate you having me on, James. And thank you so much, everyone. I really appreciate the opportunity to talk with you and share what we know as well.
Absolutely. Well, guys, thank you guys so much for being here. I want to wish you guys health, happiness, and success at trading. And I'll see you guys in a webinar very, very soon this week, I'm sure. Thank you guys so much. And one last thing, I just saw the question. Somebody said, "Hey, a replay's posted somewhere on my YouTube channel." I'm going to share that link with you guys really quickly. I do post recordings as long as the recordings are good and I have the time to edit them down. Because I have to edit out the hour long where I have just one slide showing. So as long as the recording's good and pass the muster, I will post them. Give me a day or two to get it posted, but it'll be up there more than likely tomorrow. So appreciate you all and see you guys in a webinar. Here's my YouTube channel. Not to be one of those like influencer people, because I'm not. Okay. Just if you subscribe to my YouTube channel, it will alert you when I post the videos. Okay. So I'm not trying to be one of them influencer people, but like and subscribe. All right. Have a good one. Thank you guys so much. Bye for now.